evening, everyone. My name is Henry Gamble, and this is the free video for Simpler Options. We're spending some time today following up on Facebook. So I've kind of gotten into this rhythm where on a given Monday, or in this case a Tuesday, when I get to do videos, I like to give you an idea, a setup, and then follow up with it the next chance I get to do the free videos. Facebook is a prime example of that, and I think this is something where you've made good profits on it. Knowing where to take those profits and knowing how to manage the trade is another big part of the battle. Now, we did not see Facebook pin on the monthly expiration, so when we were back down here trading around 78, we looked at a couple strategies via the butterflies. We also talked about how that high open interest at 80 might provide synthetic resistance, but it was also worth pointing out that when you have a stock that is so close to new all-time highs, to be careful with those ideas and not to bet the farm on the idea that it's going to pause there. The call debit spreads also worked out very well, and now you just have to decide, do I take my profits here, or if you have something in April, do you continue to hold it? Well, the thing that I think about with these situations is how extended am I in relation to our previous swing highs and swing lows. These are very important concepts to remember, and they will keep you out of trouble once you start to get extended. There are two primary swings that I would include with this analysis, and the first one comes in off the daily chart. Now, when you run these levels, just by default, you're going to have all of the ones that it's already passed through. I am primarily concerned with the 1272 and the 1618. You can see that you have made both of those levels off the daily chart, and this is a level where I will tell people that if you've got those April series contracts and you have any reservations about giving up profits on a pullback to something like 81.5, then you have to take those off. Because a pullback to 81.5 would not damage the trend, it would not do anything in relation to really damaging Facebook, but it would crush directional calls. So if you have any reservations about giving back those profits, I would take it. Now, if you prefer to have a little bit of it on, we have seen how the voodoo lines have a magnetic way of attracting price. That comes in at 86.64, right about 60 cents higher than today's high, and I think that is still a level we might get up into. So from that point of view, and from a daily perspective, a front month option perspective, I think it's time to take profits. However, if you come back to the weekly squeeze, this has just started to fire. So if you stepped out into something that is further dated, this I think is a great place to use something like a 2-day trailing stop. So what you're looking for here is we come back and say, okay, at this point, 2 bars back, in this case that would be Monday's low. So that would be the level that I would define my risk against, and as it continues moving higher, just keep trailing that up day after day. Allow the weekly squeeze to try to give you as much momentum as it can. When it pulls back, take the rest of those profits off, and then look to reload as Facebook moves into what I think will be a psychological target of 100. So I hope you guys are able to make some money off of that first recommendation. Hopefully the follow-up on profits gives you an idea of where to get in, where to get out, and the way that I'll be looking at Facebook for the weeks to come. So y'all have a good night, and I will see you at the next free video.